Yo, what's going on, everyone? Welcome back to another video. Quick little case study on GJ that I'm anticipating a move for the next week, which would be a sell side move back down. Well, I'll get into it. I'm not gonna talk about it now, but I'll get into it. So before I do get into what I'm seeing happening next up, let me go over a few trades that we did take this weekend. So you guys all know this one. I posted the case study on why we took this trade on Euro USD, and originally our mindset was just to hold it up to here, which was like 52 pips, or sorry, not even up to there, just up to here, right, which was about like 35 pips smacked. Well, obviously Euro USD made a run towards this next swing high on the 5-minute time frame. Now this is a pretty important point in the market. This is potentially where the market might sell back down to mitigate more institutional candles, but let's just stick to GJ for now, and I'll get into other pairs on a different day. So with GJ, let me go over this and then we'll go over this. So first thing first, I was not sticking to my rules, and my rules would have easily said do not buy here. This was a clear big red flag for me, and for some reason I still bought here, which was pretty dumb on my end. But at the end of the day, you gotta learn from your mistakes, and no matter how good you are, how much experience you have, you're still gonna make mistakes. Just learn from them and try not to make them again. But generally speaking, we bought here and the market ended up tanking, which makes sense. Now the reason the market ended up tanking is because it didn't really break any significant structure, and as it did tap into this OB over here, it didn't actually go up and break that new macro high that we're expecting, because obviously the market moves in higher highs, higher lows, right? And every time price, for example right here, came into another higher time frame POI, automatically price broke the next high right here and here. In this case, this was the next high that we needed to see broken, but price didn't break that, which kind of indicates that overall we're still gonna move down. Now after we saw that move down and all those people got stopped out, what I noticed is with this move down, price like pushed below this low over here, right, classifying as a break of structure, or rather a continuation of structure. And if we're looking at this little high, higher low, higher high move right here, you can see that we broke past it. We broke past this higher low. So if I do zoom down to like maybe the 5-minute time frame, let's see if the candles closed, and the candles itself did close below it. So that's a good confirmation that price is going to overall continue bearish. And even on the 1 hour, the candles closed below it, so we do have that break of structure, right? So basically the fact that price pushed down into here and then randomly shot up, but there is no actual evidence of why price shot up, right? There's no actual reasons. All it was price randomly shot up. There's no institutional candles in this area. It just broke structure and shot back up. So this is kind of telling you that, all right, price is still bearish, and this move up might be just to mitigate some imbalance, or test an IC, and we'll get into that. But yeah, so overall what I'm expecting is this move down was just kind of like a new low getting broken, and then this move up is just that that lower low, lower high continuation. And obviously we're expecting long term for this point of interest right here to get tapped into, right? And just to make this even a little bit more easier to understand, let's go from here. So we have a low, you have a high, you have a higher low, and you have a higher high right here, and you have once again another higher low and another higher high. So the macro time frames, or from a macro structure perspective, I thought my mic wasn't working. But yeah, from a macro structure perspective, price is still moving bullish, right? And that last higher low that created a higher high was this right here, and GJ has been pulling back down to those last higher lows. So in this case, it makes sense for GJ to come back down here. This bullshit that's happening, I call it bullshit specifically because like it's literally bullshit, right? Like you can either scalp this, take the sell, or just keep trying to chase the buy, but the buy isn't going to happen until you catch the bottom. And that's how smart money traders get manipulated as well. People think that smart money concept is going to die, but this is one thing you don't understand. Not every single trader knows not to buy here. They don't know, they think you're supposed to buy here. Not everyone knows that you shouldn't be buying at this order block. No one knows that you shouldn't be selling here. You should be selling here. No one knows these things. This is pretty hidden, and I know people make videos on them, but you have to understand that no matter how much content or how much you tell someone something, it doesn't matter if they don't get it in their head. 99% of the forex market, I'm not joking, I hope no one takes offense to this, but most of the people that are, you know, getting courses for free or just watching YouTube content, they're not going to value it. When you pay for something, it's a psychological fact that you're going to value it a lot more. You're going to spend time to actually understand what you paid for, and, you know, you're going to make sure that you get your worth out of that money, or you're going to make sure that you're going to get your money's worth. Sorry. Yeah. So don't stress about, oh, is institutional trading going to stop? Because retail trading has been a thing for hundreds of years, and guess what? It still works. I know hundreds of retail traders that still trade support resistance, and it still works. I can make a strategy today about support resistance trading, and it would work perfectly. Like, yeah. I just went off topic, my bad. But yeah, so basically, after price made this rally up, we obviously tapped into some type of candle, institutional candle, and then price went down. Right now, the last low. So let me just look at structure. We have a high, we have a low, we have a lower high, lower low, lower high, lower low, right? So what happened? Well, this low got broken and taken out, and a new low was made. So this is a break of structure, or sorry, a continuation of structure, because price is continuing down right now, but a new low was made, right? This low was made and this low was broken. Let me go right here, mark this up. Shit, my bad. Boom, and then boom. So this low got taken out by this low. Now it's really simple. The reason I draw it like this is so you can see the new lows that are, you know, lower than the previous low. But yeah, this low got broken. So what we're supposed to do at this point is look for that last major push down. That was the cause of that BOS right here. Surprise, surprised. Boom. At this point, you guys know what to do. Now with Wyckoff, remember this, I'm not looking at the charts trying to surf and look for Wyckoff every second. Like, I'm not going to be on the 5 minute looking for Wyckoff in here or Wyckoff in here. That's the stuff MentFX does, and as it works for him, but his trading style is really, really hard to adapt to, because trading in a way is more of a personal thing. It's about, you know, your personality. Are you a long-term trader? Are you a swing trader? He trades like on the 5 second chart, and for him that's sick, you know, you can make a lot of money doing that. But for me, it's too stressful. I don't like those type of situations, and it just plays with my head too much, right? So I like to stick to the higher time frames, and if I see Wyckoff, I take it. But I'm not going to look at this consolidation zone and be like, yeah, you know, there's a redistribution accumulation 5,000 4 million, like, you know, I don't know. But yeah, like, I'm not going to do that. But instead, I saw that this move down, that broke structure here, you know, was a strong move. So I went down towards, like, I think it was the 1 or the 45, and all I really did was I just looked at this area of consolidation before price broke out. So before this happened, I'm just looking at all this price action, seeing what it's telling me. So I went to Wyckoff, you know, websites right here, school.stockcharts.com, and this is distribution schematic #2 Wyckoff events and phases. Now the difference between 1 and 2 is that the 1 has a UTAD after a UT. This one only has a UT. So you can see that you have your PSY, and right after your preliminary, I think it's support. Yeah, preliminary support, you're followed by a major move up, that's followed by a major move down. That's basically it. So right here, let's go down towards like the 15 minute. Let's look at it. This is that last pullback, followed by a major move up, and then followed by a major move down. How do I know this is my major move down? Well, just look at the patterns. Look at what price has been doing. It hasn't really been making any significant move down, right? None of that's been happening. It's just creating high highs, high lows. And then boom, look at that, clean. Look at that. Now it makes sense, right? And then take your tool, and do you have a break of structure? Technically yes, but still pretty weak. But you have a break of structure as well. So this is confirmed as your buyer's climax. We go back to the 45 because it's a lot cleaner on this. And mind you, Wyckoff, it can be found on any chart, right? It all depends. But yeah, after the buyer's climax, you're followed by an automatic reaction, automatic rally, sorry, which is basically just a, you know, a blast of buy pressures that's being pushed to retest the same area where the buyer's climax happened. So after this buyer climax happened, a bunch of buyers decided to just pump a shit ton of money in price right here. After they did that, and their objective was to aim at the BC, just bring price up to the BC and then close it. That's what happened, right? Automatic rally. As soon as the buyer's climax was over, you see an automatic rally that comes near the BC. Usually inside of the BC, you're gonna see like an institutional candle or something. It's really ugly, but it doesn't have to look clean. As long as there's something like this happening, where price tries to make an effort to come back up to mitigate this IC or come towards the buyer's climax, then that's fine. Now, obviously, the secondary test is that move that finished, and then you're followed by a sign of weakness, which is just a breakup structure. After the secondary test, we have that sign of weakness, which is breaking below the automatic rally. So as if candles close below the automatic rally, it's your sign of weakness confirmed. Now, after the sign of weakness, we see that you're supposed to see a pump in price. That's going to create your UTAD, which is going to break above the ST and the BC. I'm just copy pasting. It's just copy paste. I'm just looking at this and I'm trying to envision it on here. I'm printing it on here. So after the sign of weakness, we don't get a UTAD right away. But what we do see is this consolidation. Now, when I do see this consolidation, I see equal highs above and equal lows below. The market created equal highs above, meaning that retail traders are entering, around these levels, which means that there's a ton of liquidity resting above and below these levels. That means that institutions, hedge funds, commercial banks, ICT, all jokes aside, he's not a market maker. I don't know what he's on, the drugs he's smoking, but trust me, he's not a market maker. But yeah, all this liquidity resting above, it's attracted. Banks are going above it to take out all that liquidity. Banks go above, take that money out, boom, we sell off. How do I know that this is my actual UT? Because look, after the UT, you're just followed by a major move down. Because the upper thrust, I know Wyckoff shows that there's a phase C and then a phase D. What I want you guys to know is after the UT, you're supposed to see a strong move down, just like this happening, or just like what's happened, right? And yeah, so now one more thing before I do get more into this, I want to show you guys one important thing. When I'm looking at Wyckoff, I didn't look at this and say, okay, yeah, this is my PSY, this is my buyer's climax. That's impossible. You can't predict the next Wyckoff move. All Wyckoff is, it's just helping you understand the moves after they happened, right? So right now, I don't know what's happening. To me, this is not a PSY, this is not buyer's climax. This is just haywire, it's craziness. That's it. But after it happens, because I noticed this was Wyckoff when price came around here. After it happened, that's when I noticed that, okay, this is all Wyckoff. So when you do have a POI, in this case, our POI is going to be the UTAD and the last point of supply. Now, if LPSY and UTAD is confusing, just think of it as institutional candles. This institutional candle swept a London liquidity, New York liquidity, and Asia session liquidity. Stopped. So that's 3 confirmations right there. Now, a 4th confirmation, this move in itself is more significant and better because it swept liquidity. So that's like 5 confirmations. 6th confirmation, there's an institutional candle right here. 7th confirmation, there's another institutional candle right below it. So we have 2 IC candles. Now, let me see if I have the Fibonacci by my side as well. Take our fib out. Sorry, my bad. And right here, we can see that, yes, in case we do. Let me make this no levels fib, make this a little nicer. So boom, you can see right here we have that. This one is a little bit above the blue, but that's fine. As long as it's within the range, you're chilling. So we have the first one and then we have the second one. Now they're both in the blue, giving us like, a 7 confirmations. Another 8th confirmation, breakup structure, 7 confirmation, micro structures by 9th confirmation. I'm not even sure, man. Like, micro structures buyer side. 10th confirmation, Wyckoff. That's 10 confirmations just within this trade. Now, obviously, we have to measure if the risk management is by our side as well, because we're not looking to enter unless risk management is there. And my rule is if it's not a 1 to 5, say goodbye. I made that just on the moment as well. I want trademarks for that. If it's not a 1 to 5, say goodbye. I'm telling you, if it's not a 1 to 5, we don't take the trade. Unless you're scalping, obviously, which is fine. Now, if you're targeting the next low, which would be a clean CLEAN capital 320 pips for a 17-1. And if you're even crazier, you're probably going to target your buy zone, which is going to make it up to a 24-1. Now, we don't even have to check what the risk management on this is, but we'll do it just for the sake of it. And the risk management is looking pretty dirty. It's looking really, really nice. 15 pips with a 329 pip TP. So that's a 24-1, and this is a 24-1. So they're both 24-1s. Now, what confirmation do we have for this area in specific? Well, let's look at the sessions. Let's look at session times, right? What do we have over here? London session liquidity. Sorry, I thought this move mitigated it. Never mind. Yeah, but we have London session liquidity. I think if you go down to the 1 minute time frame, right? Yeah, that's clean. That's hella clean. It's not the strongest because this is the 1 minute, but it's still equal highs regardless. And nonetheless, it's liquidity. So that means that there's liquidity resting above here that the market has to come above and take out. Now, someone might say, oh, what about like here, you know, this looks like a valid POI for price to react into, and, you know, price to react off of that one or not. Your other one, well, look what happened. Broke above, right? So it's most likely going to be continue up to our POIs right here to, you know, sweep that liquidity. So that's like 11 to 12 confirmations, because this move in itself is going to take liquidity out, right? And we also have our buy zone, which a macro structure aligns with this, because we know price has to come back down here. So that's generally what I am seeing for GJ in the upcoming week. Now, I would set limits at this point for both, one here, 0.5% each. So let me give you guys a good example. So I'm not gonna expose how much money I have in my main account, but my smaller account, which I'm slowly growing, because I have a small account and I have my main account. My smaller account is at almost $200 now. So that means that I have to find what's 0.5% of $200. So let me do that right now. 0.5% of $200. That is $1. Alright, so that is $1, which means that the max amount of pips I'm allowed to risk, sorry, not pips, let me measure the zone once before I do this. So this is a 19 pip zone. Sorry about that. So that means that if I do use a 0.01 loss size, which is 0.10 times 19, that's $1.90. I can't risk that much, right? I'm gonna have, that's too little, rather, because 0.5%, that's more than I can't risk 0.5%. It's not possible. So that means I'm gonna have to risk a little bit more, which means that in this specific trade, I might have to risk about 1% here and then 1% here, or maybe 2% here and 2% here, or 1.5% here and 1.5% here. So let's do the calculations once again. 1.5% of $2. Sorry, my phone's being really slow right now. My bad. Oh, sorry, $200. My bad, guys. I'm all over the place right now. So that's $3, and that's a little bit, and that makes a little bit more sense. So I can risk $3 on this trade right here, which is 1.5%, and that means I can use a, let's do the math. 0.20, which is 0.02, which is 0.20 multiplied by 14. That's $2.08, right? And what was the math? I can risk $3. So I can use 0.02 on this position and a 0.02 on this position. And that means that I'll make a total return of, let's see, if I hold this trade just down to here, that's 324 pips. So 0.20 times 324, that's a total return of $64. That's like, you know, I'm making over, like, you know, that's a ton of, I can't do the math. I'm assuming that's more than like, you know, that's like 25%, 30%. But I'm making 30% while I'm only risking 1.5% on each. And if I hold this even, you know, longer down to here, I'm pretty sure I just 100% my account. I just 10x that. So do the math. 0.20 multiplied by 435. So almost, okay, so not quite 100%, but we would have gotten that really close to $300. So it's basically just on risk management, right? Now we all know I had a pretty at the start of the week was pretty bad. I sent this out. I didn't take it obviously, but did send this out. Really, really good trade. I'm moving really nicely. But when we first started the week, I was not having a good week. Not at all. AUD stopped me out, I think, around here. We did catch that buy, but then price ended up reversing, so we did get stopped out. Or sorry, the buy we held from here up to here, and then the market pushed down, stopping us out. So overall, I had a bad week, but despite all those losses, I stuck to my plan. You guys know how much times I lost. I think I lost on Gbpjpy as well. Let's quickly look at this. Yeah, so Gbpjpy, I was looking to buy here, got stopped out. Buy over here, got stopped out. These were all about 1% risk or less. So let's say I lost 3 trades, which is like 3%. That one gold trade that I held, holy, you know, this move in itself right down to here, I was good. I'm gone, right? All those losses made back and profit, a lot of profit on top of that. And then I'm not even counting Euro USD yet. Let's go to Euro USD. Euro USD, this was a crazy trade, right? And it just shows that you don't really have to be correct all the time. That's something I'm trying to engrave in your mind, get that in your mindset, that you can't be right all the time. This is the problem. If you assume, or if you act like you're supposed to always be right, and then you get a loss, there's no way in hell you're gonna handle that loss like a man. Or not like a man, but you're not gonna handle that loss like a, you know, what's the word? You're not gonna handle it properly. You're gonna let it get too long. It's gonna mess with your psychology, and that's gonna affect your future wins. So that's why I say accept your losses. If I didn't learn how to accept my losses, oh my god, and I did this course and this, you know, mentorship, whatever you want to call it now, I would have quit so long ago, because I wouldn't have the guts to show you my losses. I would assume that I always have to, you know, put some fake persona and show you guys that I'm always right, but that's not the case. I am wrong a lot of the times, and that's okay. Get that in your head, that it's okay to be wrong. A lot of traders will tell you, oh, I make 100%. Good for them. You know, wish them the best. You know, it's all about energy. If you're looking at another trader who's making a ton of percentages and he claims he doesn't lose this, that, most likely he's lying. But even if he isn't lying, don't get jealous about that. Don't let it get to you, because you know you have your own plan. He or she has their own plan. You know, we're all different. We all learn differently, and we all trade differently. So try to understand that losing is a part of the game. I used to hate hearing this. I'm not a bullshit guy. Like when I first started Forex and I heard, oh, psychology, you know, accept your losses, learn to lose, or, you know, risk management. I hated these words, because I was like, okay, yeah, that's bullshit. Like you're just trying to sound motivating. But then after I really understood the market, it took me a good year to fully understand this. It came in my mind, and to maybe some of you guys haven't, like, you know, fully engraved this in your head, but trust me, after you start losing a lot, you're gonna ask yourself, how am I losing all this money even though I'm winning big trades? Well, it goes to risk management. You know what mine is? Mine is, how am I making so much money even though I'm losing most of these trades? That's what happens to me, and I want the same thing to happen to you. Now, I don't lose that much. I'm not trying to overcomplicate it, but I don't lose that much. But I do have my fair share amount of losses. So keep it real, keep it 100, you know, keeping it true. And yeah, so that's basically what I am seeing for GJ. I don't know. This is like 3 a.m. almost. I'm about to go to sleep. My sleep schedule is horrible. But yeah, thank you guys for watching, and yeah, have a good one. Peace out. Take care. How long is that? Oh, damn, 23.